Good evening from Johannesburg. My name is Isaah Mhlanga and welcome to Let's Have It Out. Tonight and every night here on ENCA, a variety of different newsmakers will get their chance to host this program, interview people with whom we disagree, give you a chance to get involved in the conversation, unfiltered, accountable, and accessible. And it starts now. In my normal everyday life as the Executive Chief Economist of Alexander Forbes Investments, I spend many hours analyzing both global and local economies and financial markets to identify risks and opportunities. All this to make sure that Alexander Forbes Investments, we protect and grow our clients' assets so that when they retire, they do so comfortably. The majority of our clients are our parents, our sisters, our grandmothers, who are teachers, nurses, doctors, miners, and so forth. The issue on my mind tonight is emerging market crisis and how these emerging markets have responded to get out of the crisis. In Argentina, families are trying to cope with around 30% inflation, while Venezuela is in its 5th year of a recession. The Turkish lira lost 40% against the US dollar. The Brazilian real is 23% down, and the rand lost 17%. These currencies weakened because the investing community, which has increasingly been foreign, withdrew their investments because of the perceived risks in countries like Turkey and Argentina, and to a lesser extent in South Africa. This leads to increased inflation, economic recessions, and unemployment. And in some countries, this has resulted in social unrest. You might wonder why emerging market crisis is relevant for you personally or for South Africa as a whole. The truth is, what goes on in other countries similar to South Africa matters to South Africans. Why does this matter in your everyday life? In April of this year, the petrol price was 14.50 Rand. Today it is over 16 Rand and likely to increase. This increase was due to a weaker rand and higher oil prices. When investors withdraw their funds out of the country, bond prices fall, and sometimes equity prices also fall. Pension funds are predominantly invested in equities and bonds, which means when their prices fall, it has a negative impact on the investments your parents make. Again, in April, government increased VAT, which is the value-added tax, from 14% to 15%. But judging the mood in the country, they decided to cushion the poor by increasing the number of zero-rated products. On the 1st of July, petrol price increased only by 5 cents as the government cushioned the poor from the full increase. But the fact of the matter is, these sorts of solutions are not sustainable. Unemployment is at 27.2%. and it's over 50% for the youth. More than half of the population lives under the poverty line, and the economy is in recession. And just this week, Statistics of South Africa announced that 69,000 jobs have been lost. These are sort of economic conditions that are necessary to cause social unrest, as we have seen in other countries. Are there any lessons that we can draw from other emerging markets to lift South Africa out of recession and to deal with the structural issues in the economy so that the majority of people can find jobs, start businesses, and live a dignified life? Perhaps we need a completely new approach to find solutions, because one can argue the existing policies have not been able to solve these issues. And we want you to get involved in the conversations, and here is how.
Tweet us at ENCA using the hashtag LHIO. Call us on 011-759-6340 or send us a WhatsApp or WhatsApp video on 082-884-6370. And make sure those videos are no longer than 30 seconds, please.
Ordinarily, one would invite government officials to get a sense of what must be done, and so often their representatives are close to retirement, which means they will not see the future they create. So tonight, I'm joined by a guest who truly represents the youth. His name is Melo Magolego, and he's an independent analyst who writes on thought leadership and comments on various issues affecting the country. Melo, welcome to Let's Have It Out.
Thank you, Isaiah, and good evening to your viewers.
I think to start with, if you hear the word emerging market crisis, does it ring a bell to you? Does it matter? Or perhaps you may have discussions with your brother or your grandmother. Do they really care about what happens in other emerging markets?
I mean, obviously, some of these things seem very much removed and remote from our daily, everyday experience. But then to understand that emerging market issues actually do affect us, if we start, for example, from the definitional notion of what an emerging market is, these are other countries that have similar material conditions and similar relationships with the dominant powers in the world as us. So whatever lessons that they may provide for us may be relevant to us precisely because of the similar conditions. I think another issue also is in terms of globalized value chains, right? We no longer just procure, say, staple foods from South African farmers, and we get it from global manufacturers and global producers. And also in terms of prices, they tend to get set globally also. So whatever happens in those countries tends to impact also in terms of what my grandmother perhaps in some rural village may be consuming. I think also another point that's also very important is in terms of monetary policy, right? Because in terms of the globalized capital flows, what tends to happen is that it tends to affect currencies and the levels of currencies, and reserve banks tend to respond by increasing interest rates.
Let's take Turkey, for instance. Mm-hmm. They just increased interest rates to 24% recently. Did it have any impact? You can also look to Argentina as well. The interest rate went as high as 60%. Does it have any impact? These are things that we ordinarily see in other countries.
I mean, obviously, if you have structural issues within your economy, it's very difficult, I think, to push through an interest rate policy to try and correct those things. I mean, obviously, in Turkey, one of the things that is a major problem is that they have significant foreign debt, right? And that foreign debt, obviously, as the U.S. increasing interest rates, because it's mostly denominated in U.S. Dollars that borrowing. So as the U.S. increases interest rates now, it starts to impact all of those manufacturers and players in the local Turkish economy that actually went and borrowed because U.S. interest rates are very low. So to the extent to which you now start to increase the policy rate in Turkey, trying to combat inflation, I think it's very difficult because that inflation in itself was spurred by the high credit growth within the economy, the expansion in money supply, and all of those things are not going to go away overnight, right?
Hold that thought. We were going out for an outbreak. Let's pay the bills, and we'll continue after this.
No.